Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, January 12th, and my name is Raleigh White, and I'm coming to you live from a nice sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on he's going to give us a key market analysis for today and the key levels for the major indices here at midday. He's going to talk about the key stocks that are set to rise regardless of the current market action. He's going to give us the best seasonality sectors for the current 2 week cycle. He's going to give us the top up and down focus stocks during this 2 week cycle. He's also going to give us an introduction into calendar spreads as we get ready for the earnings season. And he's going to share why his data miner program is his go-to seasonality tool. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. Secondly, folks, remember, I have opened the chat to everyone, but we do have some ground rules. Always be kind and supportive when you post. Also, please keep to the topic, no political discussions allowed whatsoever, and keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger's sharing. Because after all, guys, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock for Roger's pre-market briefing, we note that there were several key catalysts on tap we needed to be aware of. With the Magnificent Seven, we noted that NVIDIA and Meta were both coming into the open down 1%. On the chips, we saw that Micron was also down 1% and Intel was down 2%. As far as consumers were concerned, Walmart was up 3%. And the big news here on finances, we saw that Citigroup and American Express were both down 4%. JP Morgan was down 3%. Capital One and Synchrony were both down 9%. And this was a direct reaction to Trump's wanting to go ahead and limit credit card interest to just 10%. On the international front, we saw that Shanghai was up 1%, giving us some tailwind coming into the open. And as far as the Fed is concerned, we noticed that we had two FOMC speakers that were scheduled today, and we also have a 10-year bond auction. Now, for those of you that are wondering, what are these catalysts all about? Why do we even talk about them? Well, from Roger's perspective, if there's information that is either known or will be known during today's trading session, these represent, and they're not yet priced into the markets, right? These represent volatility flashpoints that we need to be aware of. And that's why we focus on these catalysts. As far as Roger's large cap pre-market stock watch list was concerned, we note that he identified 11 short stocks and 10 long stocks that are on his watch list. And I just want to point out to folks that these are legitimate tickers that Roger's keeping an eye on. They're a watch list. It doesn't mean that they're ready for prime time yet, but they're setting up and they have the potential to be a trade that Roger might take either as a short or a long. And if he does, he will typically post that in the trading pit or any of his other premium alert services. But this was what was on his watch list today. He went through each one of these tickers, showed the chart, told a brief story about it, and then moved on to the next. He's going to give us an update on this list when we get into the session today. Now, as far as his pre-market comments are concerned, we note that we came into the pre-market briefing room at 8 o'clock this morning, that the futures markets were, all basically down coming into the open. And this was largely a reaction to the Trump administration basically putting Powell under the microscope and looking for prosecutions. From that perspective, the market did not respond well to this. And in Roger's opinion, he just believes that this is malfeasance. This is just ridiculous. But in any way, the markets did respond. We did see that the bonds were low in their range. He also showed us that the put to call ratio was unbalanced. In other words, favoring the calls a little bit too high. And he just expects that, that's going to correct itself. He also noted that virtually all the indices were consolidating near their highs, just above support, but just moving sideways, looking like they're setting up, hopefully looking for a catalyst that's going to have them move higher. As far as momentum was concerned, momentum was up. And we also noted that the sectors continue to favor those speculative, interest sensitive stocks. And once again, that typically is a forerunner to a nice move in the markets. Now, his conclusion was this, folks, it's Monday. And typically on Monday, the mornings are pretty darn slow. But he also said, look, the reaction that we saw with the Powell situation is an overreaction, in his opinion. And he expected that the market was going to recover from that. He expected to see some mild bullishness. Bottom line, he said, look, folks, let's just be patient today. Let's wait for the S&P to break above the overnight highs, because once again, we saw this market sell off, okay, in overnight trading, and then we see it coming back. And he's going like, from his perspective, he expected that the SPY would come back into the overnight high, and at that point in time, that would be a good time to take a look at the markets. Now, as far as today's agenda is concerned, first of all, folks, thank you so much. We got a great group of people here, a large crowd joining us, and we've got a great agenda on tap. What Roger is going to be doing is he's going to be giving us a midday market analysis, and he's also going to update the key levels for the major indexes, in particularly out of respect for what we saw in this overnight activity, the overreaction, and the way the markets are responding. He's also going to talk about the key stocks that are set to rise regardless of the current market situation. He's also going to share with us the best seasonality sectors for the current 2-week cycle, and he's going to give us the top up and down focus stocks during this cycle. He's also going to give us an introduction into calendar spreads. And if you know Roger, he loves calendar spreads, in particularly as we're heading into earnings season, and we expect that things are going to start getting interesting starting tomorrow. And then lastly, he's going to share why the data miner is his go-to tool for seasonality and analysis, and also with direct assistance in determining the best calendar spreads to take. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address those periodically throughout the session so as to not interfere with Roger's presentation. I also want to mention, folks, that I've opened the chat to everyone. So remember the ground rules, okay? Also, always, if you're going to be posting, be kind and supportive. Secondly, please keep to the topic. Thirdly, once again, no political discussions allowed here whatsoever. And also, folks, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing, because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's go ahead and say hi to Matt, and let's say hi to Roger. Hey, guys. Happy Monday to you. I hope you had a wonderful weekend, and looking forward to what, Roger, I think this is going to be a very, very interesting week, not only because of earnings, okay, not only because of this mishigas, as you said, with the Fed and Powell, et cetera, but we could have tariff news coming out from the Supreme Court on Wednesday as well, on top of all the other information that's coming. So this could be a pretty busy week.
Yes, it could be a pretty busy week, and I'll be honest with you, I'm really liking what I'm seeing here.
Yeah.
I'm really liking what I'm seeing here. I'm not buying what I was not buying what this market was selling for a split second this morning, and I think everybody here knew that. I mean, one thing about me, not always, but 99.9% of the time, you never have to wonder what I'm thinking, because I'll tell you exactly what I'm thinking. I'm not hard to read. I'm not a poker player. Let's put it that way. I would suck at poker. You'd have to keep me like you'd have to keep me out of the room.
Keep you out of the
I
room,
mean,
or on the penny table.
right, exactly. I just wouldn't do well because I'm not good at I'm always, I have friends who are they kind of keep things close to the vest. And Matt keeps things close to the vest. Matt, your camera's off. But it's I like to be extremely transparent with you guys here, and I want everybody here to kind of know where I'm coming from.
Hmm.
Let me just forward. I'm just forwarding the Telegram alerts, the notifications. One second. It'll just take a second. Okay, here we go. Let me put this here. Ratings on live. Okay, there we go. Just wanted everybody to have that. Now, folks, real quick before we get into everything, and I know there's a lot of stuff to talk about here, but before we get into everything, let me just share my screen, Raleigh, if that's okay.
Yeah, go for it.
Let me share my screen. Number 5. And good morning and good afternoon, everybody. And I hope everybody's doing great today. Okay. Let's get my. You guys see my screen, right?
Yes.
Okay, good. So first things first, let me give you this document. I gave it to everybody this morning. I posted it in the Telegram channel, but I want to make sure you guys all have this. So I'm going to post it in the chat, and Matt is going to take it from me and post it in YouTube, right, Matt?
Yep.
All right, there it is. Now, this will give you all the earnings and all the expected implied volatility from earnings, from the large cap earnings that are happening this week. You should grab it. And Now, these are not all the earnings, but these are large cap earnings, okay?
Right.
And these large cap earnings, what this is for folks who don't know what this is really important, okay? Really important. What this is telling you, based on the price of the add the money option right now, what this is telling us is what the expected move after earnings. Basically, this is the expected earnings reaction as priced into the market. Okay,
And that's either
so
way, right, Roger?
either
Yep.
way. So you take the current price, whatever the current price is. Let's just say it's at 100. Okay, so I'm just making this up just to prove an illustration. Okay, $100 price of stock. Market makers expecting it to move $6.80 either up or down from $100. Okay.
Hmm.
This is an example. Okay. So you understand, folks, the range. Now, here's the interesting thing. What if we had a way? What if we had a way? Just go with me on this one. What if we found out that 18, hypothetically speaking, of course, that 18 out of the last 20 times DAL had earnings, that the actual move was less than 6.8%? What if we found that out, right? What if we could figure that out? And you're probably going, well, that'd be nice to know, but how the hell do I figure that out? Data miner. It's in data miner. I added that to data miner for our time spread function. Okay. And they're going to be they already added every stock to the upper portion of data miner seasonality. Now they're going to be doing it for every stock that's optionable for the time spread. So think about this. If you find out that DAL consistently underperforms estimates, okay, then what happens? Then time spread. If you find out that DAL constantly outperforms estimates, you don't want to do time spread on it. You don't want to do a time spread on it. So again, this is very useful information to have if you know how to use it the right way.
Hmm.
If you know how to use it the right way. If you don't know how to use it the right way, then so this data is really important, really important. And this is the actual what's priced into the option right now. So you could look at it. You could see like TSM. Do you think TSM is going to move 5%? I don't know. We'd have to look at implied volatility. So we're going to talk more about data miner and seasonality today. Okay. So just want to do my analysis real quick
That's
here.
incredible, Roger. So once again, your point is this: if you knew, or there was statistical advantage telling you what could happen, then the issue is what do you do with that? Because earnings are
Exactly.
scary. It's scary to trade earnings. I mean, for many
Well,
people, if you don't know what you're doing, it's a risk.
here's the problem. Okay, here's the big problem. And folks, this is where you want to open up your ears and listen good. Because I know a lot of you think you know better. And a lot of you will like, nah, I'll just trade ahead of earnings. Here's the problem. You see this 6.8%? It's baked into the option. So what happens is you buy the option for, let's just say $2. Okay, it's not $2, but let's just say it's $2 just to make our life easy. Okay, that $2 option, inside that option is already 6.8% move is already priced in. So you have to overcome that 6.8% move to make money on that option. So not only earnings have to go your way, but you have to overcome a 6.8% move on the option.
Mm-hmm.
And then you have to make sure that whatever the earnings come out at, that the market agrees with you. That's a lot of things you got to get right.
Exactly right.
See, I'd rather do what the market maker does. Sell it to you guys. That's what the market maker does. That's what I'd rather do. Because I guarantee you, over time, if I keep selling you options that have earnings the next day, because what happens after earnings? They implode. So Michael, time spreads, and I'll show you in a few minutes how time spreads work. Okay, I'll show you exactly how time spreads work.
Excellent.
So let's first go back up. Let's no, you can't, Faith. I want to know the actual implied volatility, not the estimate. I want to know the actual implied volatility for at least the last 20 quarters. Just like we look at data, price data for a stock, I don't want to know estimates. I want to know the actual numbers. I don't believe in estimates. I don't trust estimates. Right? I don't trust estimates. I trust actual numbers. People estimate all sorts of crap, and then reality sets in.
Mm-hmm. Mm-hmm.
All right.
Which is why it's so volatile if you don't know what you're doing. I mean, it's a trap.
Exactly. It's a big trap. It's a huge trap. Estimate is a guess. That's all it is, right? I want to know, I want to look at the data. I want to know what exactly the market did the last 20 quarters, minimum the last 20 quarters. And I finally have that data. It's called data miner. Okay. So right now, we have 412 stocks breaking out. The market is not pulling back at all. This whole Powell thing fell by the wayside. Okay. We have a very nice momentum here. The problem is we're getting close to 500. When this gets past 450, 500, it tends to want to cool off. And that's telling me this is the daily. Look how we keyed off of the 8-day. And this is looking very, very nice. What I'd like to see today is us take out this high. That would be a real nice thing right here, because we have a lot of resistance here at the 695 area. So I want to see us take that out. But I like this. This is very, very nice right here. We just need to take this area out. Okay. So that's kind of where I'm at right now. But this whole thing about Powell, Federal Reserve, the market's not buying it for a split second. The market completely erased all of it. We just need to take out this high right here. And if we take out that high, we'll be in great shape. Again, my problem is we have bank stocks. Bank stocks have been doing okay with earnings, but we do have bank stocks coming out, and we do have CPI coming out tomorrow. So let's just be very, very cautious here. We don't want to be you don't want to have too strong of a directional bias. Last time the numbers were fantastic, and I mean fantastic. Okay. Mm-hmm. Now let me give you guys stocks that I'm looking at right now. Okay. Let's talk a little bit about those stocks. Okay. All right. Got my TC 2000 here. You're welcome. I take it you guys made some money on the scalps this morning as well? On gold, silver. What do we trade this morning? We did a quickie this morning on you know, I look at so many stocks that I don't even remember. Baba, thank you. Yes, BSX and Baba. Did you guys make out on BSX and Baba in the pit? Good, good, good. Matt, did you get out of Amazon yet?
Nope.
Still holding on to the Amazon, huh?
Nope.
All right. He's tough.
We're
He's a
almost
tough,
there.
tough guy. Tough guy to please. All right. All right. So it looks like you guys are making some money. I like to hear that. All right. Let me give you shorts first. Let me give you shorts and then we'll move on to longs. Okay. Dual. Look at the compression we have here. It's a very nice, very nice compression that we have here. Nice breakdown, not overextended from the 8-day yet. That's a very nice look. You also have a head and shoulders pattern here with us breaking the neckline right now as we speak. Just heads up. Head, shoulder, shoulder. Now, how many of you guys saw that? As me pointing it out right now, how many of you guys just noticed that with me? I'm curious. Did anybody else point it out? No? No? Okay.
Yeah, it's a pretty
Folks,
classic setup. Yep.
yep. If you can't spot it immediately, just like I did, like just by looking at it right here, then you're not. Oh, Oscar side, good. It's a head and shoulders pattern right here with the breaking of the neckline. Good, good. You gotta start seeing things like that. Stephen, look up head and shoulders pattern. Right, here's your shoulder, here's your shoulder, here's your. These things are never going to be perfect. You know, it's basically trying to break out, consolidate, trying to break out, went back into consolidation, breaking down again. Anyways, just FYI, it's not a big deal, but you got to start training your eyes. You got to start training your eyes. Nobody will do it for you. Okay. It will happen with time. I promise you, it will happen to all of you with time. Okay.
This is your shampoo company here.
Exactly. Let me reach out to Deanna. Hold on a second.
Head and shoulders, knees and toes.
Yeah. Hold on. Where's Deanna? Oh.
Mm.
All right. Let's continue this. Michael says, "Can I get a phone number to ask to find out what I can get help with?" Yeah, uh, Raleigh will help you with that. Customer Service Live will help you. Okay. Let's continue. Hims, yes, they make really good. I use their shampoo. I get them for 2 for 1 at Rite Aid. I've been using them for years, and they're great. They have this very nice smell, like lavender. It's very cool. Wicks. All right. All right, let's continue. DVA. Nice short right there. And NTGR. Nice short. Nice short. Okay, let's go through the longs, okay? Baidu. Yes, Baidu. That's a nice long. What chart does this remind you guys of? Let's see if you guys can from folks in my pit program, what chart does this remind you of? Let's see how good Palantir. Let's look at Palantir. No, definitely not Palantir. Definitely not Palantir. Does anybody remember Baba? Yes, Harold. Yes. 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 Right there. If you take this bar away, right here, you have exactly the same pattern. Look. Um, see? Down and then up right here. It just doesn't have that upper bar. It's the same pattern. Okay. Okay. Cat. Caterpillar looks very nice right now. Caterpillar looks really nice right now. Doesn't it? By now, you guys know what a good looking stock looks like. It's got to get above this area though, right here. It's got two high volume bars right here. Got some serious resistance right there. RTX. All right, RTX. DG. Oh, that looks very nice. Matt, did I tell you how much I like DG right now? Is he here?
Yeah, I'm
Oh,
here.
he is here. Yeah, he is. Did you make money on that trade?
We did.
Good. Sets. This one's getting a little overextended. This is getting a little overextended. This is good for maybe a day trade if it gets above the VWAP today, but that's about it. Okay. SEDG. I've been all over this stock this morning. And I really mean I've been all over this stock this morning. That's a very nice stock. Very, very nice stock. Still hasn't, still going up. NDAQ. That's a nice stock right there. It's actually setting up to be a very nice A line, isn't it, Matt?
Doesn't look bad.
But earnings are in a couple of weeks, just FYI. But since we don't hold stocks for more than 2 weeks, Matt.
Yep.
Good question.
Matt has a New Year's. You want to hear Matt's New Year's resolution?
Yes.
Do you guys want to hear Matt's New Year's resolution? Matt's New Year's resolution is never to hold a trade for more than 2 weeks. Losing trades, not winning trades. Is that right, Matt?
Yeah, I mean, I don't think it matters either way. Just 2 weeks.
Say what?
I don't think it matters either way. Just 2 weeks.
That's what I just said. 2 weeks.
Well, you said losing trades, not winning trades, but even if they're
yeah,
slightly
either way.
winning,
Yes. Either way. I don't think you've ever held a winning trade for more than 2 days. 2 weeks. But that's fine. I'm good with that. I'm good with that. You guys all heard him, right? You guys all heard him. There's only Matt, no pressure. There's only how many people are on YouTube? I know there's 899 people, 890 people here, and how many are on YouTube, Matt? No pressure.
there are
How many you got on YouTube?
99.
All right. So there's 600 people here. So you all heard it, right? Matt, not holding trades for more than 2 weeks. New Year's resolution. PL. Yeah. Yeah. 2 weeks, 10 business days, 14 regular days. Just FYI. All right. You heard it. You heard it here. PL's looking good right off the VWAP too. But you see this high is lower than this high. I would be very cautious taking this pullback right here. PL Tiva. I like this Tiva. I like it. I wouldn't day trade it today, and it looks like it may be topping here, but I do like this Tiva. Still looks pretty good. RTX. That looks really good. RTX. 1 second, I want to check something real quick. Yeah. Yeah, Microsoft. I don't like what Microsoft is doing right now, Matt. Do you see this? I think we may be going down to the VWAP right now. Yeah, I think we're going to go down to the VWAP right now. I'm thinking if we don't start pulling up, we're going to come down to the VWAP, come down to this area right here. Test this area right here. And if we test this area and break it, we're going to the VWAP. So my first support is 693.81, and the second one is the VWAP. Richie, tell me if you're seeing anything differently than I am. I'm just curious. We tried to go up here. We got a lot of resistance. Now we look like we're heading down. If we break the 15, the next level is going to be somewhere right here, around 639.70, 639.80. If we break that, we're going to the VWAP. Does anybody disagree with me? It's okay to disagree with me. Here's the level. That's level 1. I would say level 2 is actually right here, slightly below the VWAP, right there. Yeah, Richard says I agree. Okay. Again, it doesn't mean we could just stop here and continue going higher. We have to first break this level, 693.87. We don't just magically end up here. So just FYI. This price action is very sheepish right now. There's not a lot of institutions right here. There was some buying coming in the morning, aggressive buying, but after that, this is kind of dead price action. Although we do tend to rally Monday afternoons, so anything can happen, but don't be surprised if we hit the VWAP. All right. Okay. All right. So I gave you my shorts. I gave you my longs. Now, I want to show you something that I promised to show you. Okay. Matt, where's no, not this, not that's what Dave is going to put in the deck. Do you have the sectors, the sector map?
Mm-hmm.
You do. Where is it?
You want a screenshot of it, or you want me to just share my screen?
You know what?
I'll
Why
just
don't you go ahead?
screenshot it. That'll be easier.
You want a screenshot? Okay,
Yeah.
give me a screenshot. One second. He's just going to send me a screenshot and I'll share it.
So interesting question. Faith asked the question. I know a number of people ask this. Roger, pre-market, you have a watch list and then you have a midday update. Does that mean you scratch the morning and you're focused on the midday? Is that process you go through?
Some I scratch, some I shift. It just depends on what the stock is doing. Some I switch over, and some you'll notice that the morning list, like for example, PL was on my morning list and PL was on my afternoon list.
Mm-hmm.
So Micron was on my morning list. Micron is on my afternoon list. I think WDC also was so no, I what I do is I basically delete some from the morning list, and if I still like it, I shift it over to my afternoon list. Yep. And then what I do, you guys aren't here to see this, but what I do after that is I shift it to my 330 list, and I start looking for those stocks to see which ones I want to hold overnight. Yep. And I what I do is I compare them with the Pro Trader dashboard, and I look at the hourly, not the 5-minute, but the hourly. And I look at the ones that are up here to see which ones are the strongest on the hourly. And if I see one of my 330 stocks on my hourly, I don't even think twice.
Yep.
That's Bill. I actually just answered your Bill. I answered your question without actually seeing your question. So Bill's question, yeah, you understood it. And how do I know when to hold overnight? And I just answered that question. I basically keep looking, keep adding, subtracting stocks. I keep moving stocks from here down here. As they go down here, they get funneled. Okay.
Yep.
The funneling process continues all day long till 3:30 in the afternoon, and then I switch this over to I use this all day long, but then after for the swing trades or the afternoon trades, I switch this to hourly. Okay, I just have another scanner. I don't I have a lot of scanners. So I switched this to hourly. You guys get both on the Pro Trader dashboard. You have both. I just don't I just want it to be faster, and I don't use hourly during the day. And I tell you guys not to use hourly during the day. I tell you use 5 minutes during the day. But then see, like Baba's still the strongest stock in the market right now. Look at that. We took a bite out of Baba this morning. So I funnel them, and then I try to match up some of the stocks that are on my list at the end of the day, which means all day long I go through them. Remember, I'm not trying to find stocks I'm liking. I'm trying to find stocks that I'm hating. Okay? I mean, I'm trying to disqualify. I'm not trying to include. I'm always trying to figure out why it's bad, not why it's good. Okay? So, and I'm being very picky, as you can imagine. So if I look through a stock 4 or 5 times in a day, which is how many times I'll look at a stock on average, and if I still like it, 4 hours later or 5 hours later, it must be a really good looking stock. You know what I mean?
Exactly. And it was interesting. Mitch asked the question a couple of different ways here. He's going like, wow, Roger, how do you find a stock that's ready to move up like Baba did today? And I think you just showed him using the Pro Trader dashboard. You've got a scanner that looks at the stocks that are significantly outperforming the SPY.
I do it exactly the same way that I've been doing it for 2 years and 2 months publicly and for 28 years privately. Exactly how I've taught Omar, exactly how I've taught Richie. It's called relative strength and relative volume. They're the two things right here, which is which is what my scanner has. Think about this. I could have any scanner I want. I have TradingView, I have TC2000, and I have this. I can have anything I want, but what scanner do I always am I always using? The Pro Trader dashboard scanner, the one that I created for myself, the one that has all the tools you need. Baba, look at the stocks that are the strongest right now. These are the stocks. Baba's still right up here. Look at volume on Baba. So Baba is the strongest stock, and it has the highest volume on my list here. That's why I went long Baba. There's no, I think you guys are looking for like some kind of a weird answer. I'm telling you exactly what I look at. I use my Pro Trader dashboard, which is exactly what Richie's looking at, which is exactly what Omar is looking at. Now, I have a 94.3% win rate with using this. Omar's over $7 million. Richie, I don't even know where he's at. I'm afraid to ask. The point is that why do you think we're all using the same thing? Because it works. Just have to learn to use the right tool in the right context and get rid of all that crap you've been using all your life. And finally admit to yourself that it doesn't work. There's no holy grail. And Jason too, as a matter of fact. Jason, what are you pulling in a week on average? Can you tell us? What are you pulling in? Don't be shy. Just tell us. What are you pulling in a week on average? Ballpark it. 35,000. Okay. Thank you, Jason. I know who to ask. So, hey, don't cut. I don't pay Jason to say this. You know. Yeah, it's called the Pro Trader dashboard. That's how I generate the trades in the pit, and nothing has changed in the last 2 years and 2 months. There's a reason it's the number one selling software in our company. There's a reason for it.
Right.
Yeah, Michael, what have you been doing? Mitchell, what have you been following? I'm just asking you. What have you been doing, Mitchell? Larry, Jason is not using $1 million account. Yeah. I haven't given an AMD signal, Mitchell, in the last. So you didn't lose that money as a result of me, my friend. Okay. So let's go through this. So seasonality. Now I want to explain to you guys. I want to explain to you. This is the seasonality for the next 2 weeks, right, Matt?
Correct.
Okay. All right. So this is what we can expect from the market in terms of its seasonal proclivities. Okay. We're on the 12th. So let's take a look. This is basic materials. Okay. This is basic materials. How does seasonality look for basic materials over the next 2 weeks, folks? You could see this is percent, 2%. This is 1%. We're here for you, Mitchell. Mitchell, we're here for you. All right. It's not too good, right? Kind of, wouldn't you agree, Raleigh? Just kind of,
Exactly. Nothing
How about
exciting at all. Yep.
How about XLC? I mean, a little up, a little down. Nothing really that fantastic, right? Nothing. XLE, nothing. XLF, by the way, folks, you should pay attention to this because we're expecting earnings starting tomorrow on XLF. And look at how the next XLF, seasonally, how XLF is looking. Do you guys see this?
Mm-hmm.
Not good.
And that's going back how far, Roger?
That's a great question for Matt. Matt, how far back are we going?
To 1990.
So
yeah, so we're not going back that far.
Years. Yeah,
we're not going back that far, Raleigh. Just 1990. We're not going back that far. Just 1990.
Just 1990.
Just 1990.
It's just a point I wanted to make.
Yeah. Right hand of screen is cut off. I don't think. No, not at all. I think something on your end. Nothing is cut off. This is XLF. It's not cut off. Well, anyway, so I'm just letting you know we got to take this into consideration. Now, the following week, remember, this is seasonality for 2 weeks, the next 2 weeks, and today's Monday. This is where we're at right now. So it looks bad for the first week, but right after all the major earnings come out, it's starting to look good. Now, I'll tell you what what I believe. I believe that the bank numbers are actually going to be just fine. What I'm concerned about is their forward-looking statements, okay? My email, Lisa, is roger@rogerscott.com.
I'll take care of this, Roger.
Thanks, Raleigh. Thank you. So you see how we're cut off here? This is making me nervous. Not cut off. I mean, we're down here. This is making me a little nervous. This is not a huge move, but I'm not liking what I'm seeing here, okay? XLI, industrial stocks, real negative to like the last few days of next week. Not good either. XLK, they look good as the week progresses, heading into next week. But according to this, seasonality is not really that great till about the 17th. What's today? Today's the 12th, right? So Thursday, seasonality begins for Thursday for XLK. Again, something we got to be mindful of this, folks.
Yep.
XLP looks like a roller coaster in Disneyland. I mean, I don't know what to make, heads or tails out of this thing. Real estate's not looking too bad, but real estate doesn't really move the market, especially this sector. This is commercial real estate. Utilities is bullish. That's not great. Utilities is defensive. But now you got the whole nuclear thing. You know, if you want to talk about a sector that's getting reinvented, it's not, I almost said AI by accident. It's not technology, AKA AI. It's now utilities. Utilities are now becoming nuclear stocks. Yeah. All right. XLV, healthcare. Well, you know what? Healthcare is actually, I just looked at healthcare, and I'm going to be talking about healthcare in the next 45 minutes. I'm actually going to give you guys some stocks. You can run this report in Data Miner to your heart's desire. Yes. Consumer discretionary. Notice something. And Matt, notice this too. Consumer and discretionary and tech, they don't look all that different here. Okay? And both of them are actually looking pretty good next week. So if we can get past this week, we'll be okay. But we got to get past this week. Where is XLC? XLC is not looking bad here either. So pretty much the real uncertainty is the next few days. And I'll tell you something. If you look at the SPY, looks like we're just sitting at the 8-day. Oop, we broke that level that I mentioned. Remember that support area I talked about at 690, 693.95, and then if we don't pass that, we're going to get to the VWAP. Well, we're starting to head there. Just FYI. I'm not going to repeat it. I'll show it to you, clients, so you could see it with you could see it with your own eyes. So here is XLK. See how it's pretty bad till about the Thursday of this week. It's not okay. Okay, it's not that bad. It's just not that. It's just nothing. It's not here nor there. This is like less than half. This is not even 1%. This is not even half a percent down. So what it's telling us is seasonally there's just nothing going on for technology for the next 3 or 4 days, and then we start getting into some nice positive tailwind. Same thing from XLY. They're related to each other. Like Amazon is XLY, for example. What this is telling us that we don't have a lot of seasonality till about 18th, 19th. Basically, this week is rather flat. But notice all the downside moves are like 1%, half of 1%. Where is that? Where's the right here, XLK, less than half of 1%. So I'm not really saying this is bearish. This is just nothing. There's no tailwind. This is 10-day hold. This is 10-day hold, David. This is 2 weeks, 10-day hold. Now, here's where to prove that what I'm saying is not some monkey business, look at seasonally here. This is the indexes combined. And look how this week is looking. Just very, very, look, nothing down over 1%. So we're not really looking for a big move down, and then we start coming up next week. So the truth is, based on everything I'm reading here, it looks to me like we're just going to be a little choppy for the next few days, probably just gliding through that 8-day EMA, if I had to guess. And then later, towards the end of this week, we start picking up some rocket fuel. That's what this looks like to me. Because look, the indexes are all bullish next week. And they're all really just kind of mixed. Like NASDAQ is not really down this week. This is a bunch of nothing. Maybe Dow is having not such a great time, but next week, everything seems to be picking up okay. I'm not really seeing anything negative. So to give you a full analysis, nothing really, I'll talk about how to get data miner in just a few minutes. So this week, I'm just not seeing a lot of tailwind for the market, but next week we seem to be picking back up. Now this is seasonal, and seasonal is not a sure thing. Now also, in a few minutes, I'm going to talk about data miner, and I'm going to give you guys a whole bunch of seasonal time zones. I'm going to what I call red meat. My suggestion would be to take a piece of paper and a pen and to take notes as we talk about it. Now, before we get there, do we have any questions?
Yeah, well, interesting, Roger. A lot of people are pretty fascinated by what you're showing here, and I can tell that there's people here that ask some questions specifically about the ProTrader dashboard and about the data miner. For those of you that are interested in more on the ProTrader dashboard, just basically call our support team. I've gone ahead and put that in the panel here. And folks, with regard to the data miner, after this session, we're going to be moving into another session where Roger's going to be doing a deep dive into the data miner and show you exactly what it is, how he uses it, and what its value is. So what you've got is a little bit of a teaser here. So all that's going to be covered coming up, Raj.
Exactly what Raleigh just said. And I'm also going to give you my weakest sector for the next 10 days. And I'm going to give you the weakest seasonal stocks in that sector for the next 10 days. I'm just getting warmed up here. Okay. So I just explained to you the benefit of seasonality, and I'm going to show you a real powerful tool that analyzes seasonality for me. But let me tell you another cool thing about this tool, data miner. We added a major when I say we made an addition to data miner, we went from data miner 1.0 to 2.0 to 30.0. Like we reinvented the whole thing. We added options in it. We added implied volatility to it. But one of the things we added to data miner, one of the coolest things we added to data miner, and data miner is a program that my vision was to create a true data mining software that could do more than seasonality. So that anything to do with numbers and data could go into this data miner. It started as a spreadsheet 4 years ago. And now it's a really advanced software. But in addition to seasonality, so it can give you seasonality for every stock, just like I showed you right here. It could do this to you for every stock and also tell you the win rate and a loss rate every year. I'm going to go through that with you right now. It's really state of the art and nobody else has it, which is why I had to create it from scratch. But I added one more function to it, and that's called time spreads. And time spreads are calendar spreads. So let me tell you what I do with Data Miner. And I had to input all this data into Data Miner. So a few minutes ago, a little earlier ago, I showed you this sheet. And I showed you, I showed you how these numbers are a gold mine to have, because this tells you what to expect. This tells you what to expect tomorrow on DAL as baked into the price of the option right now. So if you take the option and you put a reflection mirror on it, it'll reflect this level of implied volatility. You understand? So let's just say, hypothetically speaking, that I look and I find out that over the last 20 quarters, Delta only moved 4% after earnings, not 6.8%. I can go ahead, watch this, look. Actually, let me go here. Let me show you what I could do. Scooby-Dooby-Doo.
Did you just say Scooby-Dooby?
I said, let me show you what I
Roger's
could
feeling
do.
frisky today, I can tell.
Scooby-Dooby-Doo. Oh, I'm in a great mood. Yeah, I had a great weekend. So let me show you something interesting, something you may or may not know. Just think out loud with me here, okay? I want to show you guys something right now. Okay. So this stock, Delta, is coming out with earnings tomorrow, okay? Right? And let's say, hypothetically speaking, and this is totally hypothetically speaking, but let's say hypothetically speaking, I thought that the stock was not going to do anything during earnings. It was going to be flat. It wouldn't go anywhere. Well, right now it's expecting a 6% move. Well, a 6% move in a $70 stock is it's almost $5. So the market makers are expecting this stock to go here. Let's make it a little smaller. Here, let me see if I could. Nah, I won't do it. And here. Right here. They're expecting the price to go either here or here. They don't know where. And I say, hypothetically speaking, that it's not going to go anywhere. So let me show you a little trick. What happens if, look at the implied volatility on the options that expire on Friday, and look at the implied volatility of options that expire the following Friday, right? Okay. What if, now tomorrow, right before earnings, or tonight, this is going to be close to 100%, and this is going to be about 60%. So this option is going to be 40% more expensive than this option. Otherwise, it's just not useful. 40% overpriced. 40%. 40%. Just the implied volatility. So what happens? What happens if I, hypothetically speaking, sell this option for $3.35, okay, and buy this option for $3.70? How much am I going to be debit? How much am I going to be debit? 35 cents. That's my debit, right? Okay. Just go with me here. 35 cents. That's how much I've spent. Now, if tomorrow during earnings, this option goes to 1,000, hey, I'm covered. Tomorrow, if this goes to 0, I'm covered with a week to go. I'll take whatever this does, and I've got another 5 days on it. Follow me here. So let's just hypothetically say Friday comes. Now remember, I paid 35 cents for the pleasure of this exercise. So let's just say Friday comes, and let's say on Friday this option that Delta expires right at $69. How much is this option going to be worth, the 69? How much do you think it's going to be worth? Nothing. 0. Come on. How much will the 69 be worth if we expire at 69 on Friday? Zero. How much do you think this will be worth? Yeah. How much will this be worth? What do you think? How much do you think this will be worth if the price is exactly where we are right now on Friday? Well, considering this has 5 days to go plus earnings, it's a 335 and this is a 370. Where do you think it's going to be for this Friday? This Friday or Monday? Next Monday? Probably about $3. Exactly, Darren. So, Darren, let me ask you a question. How much did you pay for the spread? Darren said $3.35. How much did you spend on the spread? 35 cents. Hey, Darren, what happens when you divide $3.35 into 35 cents? Just made 9 times your money. You made 9 times your money, almost 10 times your money. What? How did that happen? You mean you risked 35 cents and you made 10 times your money? It's possible. Usually you get about 25, 30%. And sometimes you can get that before the earnings even come out. Do you guys understand? That's how you trade calendar spreads. You sell the expensive implied volatility and you buy the cheap implied volatility. This is what market makers do. You understand? I've built this into Data Miner to give you the odds of how often the option does not outperform the expectations. That's built into Data Miner. You understand? For every stock in the S&P 500, and we're adding all the others now. We have to scrape the data. So you see what we're doing? We're selling this option and we're buying this option. We're selling this option and we're buying this option. We start out as a debit, but this only has 5 days to go and this has 10 days to go. Yes, there is an advantage of calls versus puts. With puts, you do diagonals. You do a different strategy. We do that on weekly cash flow. How do you learn to use it? Well, I'm going to teach you how to use it once you sign up for Data Miner. Speaking of Data Miner, let's talk about Data Miner. Do we have any questions before we move on to? I wanted to give you a little taste of the power of how you should be trading earnings. The only way to trade earnings and not trade earnings any other way. Because if you trade earnings any other way, you are gambling.
Well, I hope everybody understands that the key takeaway in this hypothetical that you gave here was the assumption that nothing's going to happen. And that assumption is not basically something that you hoped for. Data Miner told you likely nothing is going to happen.
Yeah.
So that whole example was predicated on the fact that Data Miner said, hey, Roger, on this stock, we typically underperform. Without that, this example doesn't mean anything.
I'm taking advantage of two things. I'm taking advantage of one option's implied volatility being at least 50%, 40 or 50% higher than the other ones. The one I'm selling, I want that option to cover the majority of the cost of the option that I'm buying. Therefore, my out-of-pocket risk is small.
Yep.
That's number one. Number two, I want to make sure that that over time, that option's move during earnings is smaller than most people expect it to be. Do you understand? There's two things I'm looking for. And if I can get those two things, I just put the odds on my side bigly. Okay? Bigly. Huge.
Bigly.
Huge. Bigly. Okay? Bigly. All right. So we're going to talk, and Data Miner is the tool that I use to generate time spreads, these calendar spreads, and Data Miner is what I use to generate seasonality. Now, what's best for you right now is to take a piece of paper because Uncle Roger is going to give you a lot of red meat. And if you're a vegetarian, you're going to get tofu instead.
And folks, I need to let you know if you are with us on YouTube at this point in time, and I think, Roger, you said there were about 90 to 100 people there. Now would be a great time to switch over to the Zoom room. And folks, the reason we do this is YouTube does not allow us to do promotions or even play music on YouTube. So from that perspective, we're going to be closing the YouTube room, and Matt's giving you a link where you can just come over here into our Zoom room for the rest of this presentation.
And I just need to check on something right now real quick.
Yeah, we'll just give people a couple more moments to come on in.
All right. I'm just going I have a position in WDC. I just need I just need to just give me 1 second.
No problem.
Share.
Folks, this is Roger multitasking.
Sorry about this. I just need to liquidate
No,
partial.
nothing to be sorry about. We all understand.
I need to take partial profit in in WDC. I'm just minimizing my position. Believe it or not, I actually do trade myself when I can remember to. And anyway,
And I know your wife is asking you to do more of that.
my
Even
wife
gave you
is
a special account for it.
she's my wife. My wife yesterday. Oh, don't even get me started. She really wants me to start. She wants me to she remembers how aggressive I used to be back in the day, and she wants me to do that, but she forgets that I'm actually doing a lot more now. I'm actually teaching people, and it takes a lot of my energy away. I'm not just staring at the monitor. So it's all good. It's all good. I'm not complaining or anything like that. What I need to do is I need to organize myself better, which is why I got myself a new computer, and I have to create a better process for myself, and then I'll be able to. I need to basically have my brokerage screen on a separate computer available for me at all times, open, and I won't forget to place my own trades. Because what happens is I remember to give you guys a trade, and I end up forgetting to take it for myself or close it out for myself, because I don't care about my position nearly as much as I care about you guys. So what am I going to do? All right, let this be the biggest problem in my life, folks. You're